Hi everyone, in this video let's continue with the other areas of amendments in CA Final Audit for May 2023 examination. So let's begin it. One amendment is there in number 5, which is company audit CARO 2020. Amendment is that small company definition. Small company means a company other than public company whose paid up share capital does not exceed 4 crore rupees and turnover as per the profit and loss account for the immediately preceding financial year does not exceed 40 crore rupees. Now the limit has been increased to 4 crore and 40 crore rupees. 4 crore and 40 crore rupees. If such company is a small company, even if it's covering under private limited definition, even then CARO will not be applicable. This we have already discussed in CARO 2020 video itself, right? Now, let's move on. Chapter number 7, Audit Committee and Corporate Governance and the LODR Regulation. What are the amendments in this area? Has quite a lot of amendments. So, let's go on one by one. Amendment number 1. The audit committee shall have minimum 3 directors as members. Minimum 3 directors as member. At least 2/3 of the members of the audit committee shall be independent directors in the case of a listed company having an outstanding SR equity shares. The audit committee shall comprise only of independent directors. Minimum 3 directors should be there. Two-thirds of the members should be independent directors. However, in case of a listed company having outstanding SR equity shares, the audit committee shall comprise only of the independent directors. Just give me a minute. Okay. Just hold on for a minute. Okay. Yeah. Now, amendment number 2. Deletion of information on statement of significant related party transaction. This was deleted now. Okay. Either it was to be mandatorily reviewed by the audit committee, but now this is deleted. Now, deletion of point number 4 again, which is that an auditor shall ensure that the chairperson of the board of directors of top 500 listed companies is a so and so person, that is non-executive director, not related. Those auditors' work has been now been reduced. Now, let's move on to amendment number 3. The listed entity shall ensure the approval of shareholders for appointment of a person on the board of directors is taken at the next general meeting or within a time period of 3 months from the date of appointment, whichever is earlier. The listed entity shall ensure that the approval of shareholders for appointment of a person on the board of directors or as a manager is taken at the next general meeting or within the time period of 3 months from the date of appointment, whichever is earlier. Right. So this is now been earlier. It was with some authorities. Now it is transferred to the shareholders. Now, provided the appointment, this pen is newly included for a syllabus. Okay, provided that the appointment or reappointment of a person, including a managing director or a whole-time director who was earlier rejected by the shareholders in the general meeting, shall be done only with the prior approval of the shareholders. Who was earlier rejected shall now be done only with the prior approval of the shareholders. Provided further that the statement referred to under subsection 1 of section 102 of the Companies Act 2013 annexed the notice to shareholders for considering the appointment or reappointment of such person earlier rejected shall contain, who has been earlier rejected. For that, I have to send a notice which shall contain a detailed explanation and justification by the NRC, that is Nomination and Remuneration Committee, and the Board of Directors for recommending such a person for appointment or reappointment. Why he has been rejected by the shareholders? Why I am mentioning his name as for appointment or reappointment? That detailed justification has to be given by the Nomination and Remuneration Committee, and if they are not there, then the Board of Directors. If they are there, then together they can give. Okay, now amendment number 4. In amendment number 4, independent directors. What is changed here is, see here this 3, everywhere 3 years is added now. Okay, let's read on definition. Okay, Independent director means a non-executive director other than a nominee director, non-executive director other than a nominee director of the listed entity, who in the opinion of the board of directors is a person of integrity and possesses relevant expertise and experience, who is or was not a promoter of the listed entity or is holding subsidiary associate company. Fine. Now, who is not related to promoters? He is not a promoter and not related to a promoter of either the listed entity or is holding subsidiary associate company, who, apart from receiving the director remuneration, has or had no material pecuniary relationship with the listed entity or its holding subsidiary or associate company, or the promoters or directors during the 3 immediately preceding financial year. This is the area of amendment. 3 immediately preceding financial year or during the current financial year. He have to receive only the director remuneration or the sitting fees for that case, but does not have any material pecuniary relationship either with the listed entity, holding subsidiary associate or director or promoter. But anybody should not have any material pecuniary relationship. Okay. Now, again, none of whose relative is holding securities or interest in the listed entity or its holding subsidiary or associate company during the three immediately preceding financial year or during the current financial year of a face value in excess of 50 lakh rupees. In excess of 50 lakh rupees. These could be an MCQ area, so be careful because there are some amendment in this area. This entire area becomes important. Okay. 50 lakh rupees or 2% of the paid up capital of the listed entity, its holding subsidiary or associate company, respectively, or such higher sum as may be specified. Okay, this holding interest should not exceed, that is, holding securities of interest should not exceed the face value 50 lakh rupees or 2% of the paid up share capital of the listed entity. Okay, now, or such a sum as may be specified, is indebted to the listed entity, holding subsidiary associate, promoter or directors in excess of an amount as may be specified, during the 3 immediately preceding financial year or during the current financial year, has given a guarantee or provided any security in connection with the indebtedness of any third person to a listed entity holding subsidiary. Guarantee or security in connection with the indebtedness of a third person directly indebted or provided a guarantee. Okay, for such amount as may be specified during the immediately preceding 3 financial years or during the current financial year. Now, has any other pecuniary transaction or relationship amounting to 2% or more of the gross turnover or total income, 2% or more of the gross turnover or total income, provide pecuniary relationship with the listed entity, its holding subsidiary associate, or the promoters or directors in relation to point A to D above shall not exceed 2%, okay, of the gross turnover or total income, or 50 lakh rupees or 50 lakh rupees or 50 lakh rupees. So what is the specified sum? 2% of the gross turnover or total income of 50 lakh rupees or such higher amount as to be specified from time to time, whichever is lower. There could be a sum which is as to this area because it's untouched. The relationship or transaction with the listed entity or its holding subsidiary or associate company or their promoters or directors in relation to the points A to D above shall not exceed 2% of its gross turnover or total income or 50 lakh rupees or such a higher amount as to be specified from time to time, whichever is lower. So again, who neither himself or herself nor whose relative has held the key position of key management personnel, has been an employee of a listed entity, subsidiary associate company, or holding, or any company belonging to a promoter of the group of the listed entity in any of the 3 financial years again. Okay, provided that in case of a relative who is an employee other than the key managerial personnel, this restriction under this clause shall not apply. See, if the relative is other than is an employee but not a KMP, then this restriction will not apply. This restriction shall not apply. Now, is or has been an employee in the proprietor or a partner in any of the 3 financial year, immediately preceding the financial year in which he is proposed to be appointed in a firm of auditors or a company secretaries and practice of cost auditors of the listed entity firm or CA CS. Then any legal or consultancy firm that has or had any transaction with the listed entity, its holding subsidiary associate company amounting to 10% or more of the gross turnover of such firm. It's not about listed turnover, it is about the turnover or total income of the particular legal firm or consulting firm, 10% or more. It is so that means this listed entity is very much important, right? That's why if there had been some employee or proprietor or partner in such listed, legal entity, then he shall not be an independent director. Holds together with his relative 2% or more. 2% or more, not allowed. Is a chief executive or a director by whatever name call of non-profit organization that receives 25% or more of its receipt or corpus from the listed entity or any of its promoter holdings to associate company, or that holds 2% or more of the total voting power of the listed entity. If I being a non-profit organization, I'm going to receive 25% or more of the corpus or the receipts from this particular listed entity or its associates or its related parties, or I have invested 2% or more on such total voting power of the listed entity. I am the chief executive director who is there in both. Then I could not be an independent director. As a material supplier, service provider, customer, lessor, or lessee of the listed entity, I should not be there with any business relationship. Then, who was not less than 21 years of age? 21 years of age, minimum age for directorship. Who was not a non-independent director of another company on the board of which a non-independent director of the listed company is independent director. Say, I am an independent director in ABC Limited. Okay. Mr. B is an independent director in BCD Limited. Okay. Now, he is also a non-independent director in my company. Then I can't be an independent director there. Okay. Then. Amendment number 5. An independent director who resigns or is removed from the board of directors of a listed entity shall be replaced by a new independent director. See, there is no AGM time here. Okay, only one AGM or board meeting time is not there. Only one time is there. Okay, so that's what the amendment is. An independent director who resigns or is removed from the board of directors of a listed entity shall be replaced by a new independent director at the earliest, but not later than 3 months from the date of such vacancy. 3 months from the date of such vacancy is again an important MCQ. Now. Amendment number 6. The board of directors of every listed public company shall constitute a nomination and remuneration committee, which shall comprise of at least 3 directors, all of whom shall be non-executive directors, and at least 2/3 shall be independent directors. See, NRC should comprise at least 3 directors. Again, on top itself, we have found that. Let's go back. Just give me a minute. See, here we found Audit committee should again have 3 minimum directors. Similarly, NRC should also have 3 minimum directors. Okay, out of whom everybody should be non-executive and 2/3 should be independent directors. Now, role of nomination and remuneration committee. Role of nomination and remuneration committee. Here, this point has been newly added. Okay, with other roles, this role has been newly added. Let's check it. For every appointment of independent director, the nomination and remuneration committee shall evaluate the balance of skill, knowledge, and experience. Skill, and experience on the board. And on the basis of such evaluation, prescribe a description of the roles and capabilities required to be an independent director. The person recommended to the board for appointment as an independent director shall have the capabilities identified in such description. See, what I have to do is, I being in the nomination remuneration committee, I have to list out what are the requirements to be an independent director, what are the required skill, knowledge, and experience to be an independent director. And if I'm going to suggest some candidate or for some candidate for that particular candidature, then such person should also qualify all these requirements. Only then I could make the recommendation for the purpose of for the purpose of identifying suitable candidate. The committee may use the service of external agency. It can use the recommendation of the external agencies if required. Consider candidate from wide range of background having due regard to diversity. See, consider the time commitments of the candidates. Consider the time commitment, whether he could commit such a, see, if he is holding multiple directorship, then he cannot be a good worthy independent director in my company, right? So I have to consider the time constraints. I'm not going to blame him, but I could consider who could allocate more time for my business. Now, amendment number 8. Okay, this is again a revised regulation. Okay, here this one is newly added now. Okay, I will list an entity. The provision of risk management committee shall be applicable to the top 1,000 listed entities determined on the basis of market capitalization as at the end of the immediate preceding financial year, and okay, and it's and okay. Okay, let me make it. Okay, yeah, and high value listed debt listed entity. High value debt listed entity. Now, Amendment number 9. These points has been newly included. Okay. We have saw one point for the nomination and remuneration committee, like role of nomination and remuneration committee. Likewise, we have a role for risk management committee. Risk management committee to formulate a detailed risk management policy, which inter alia shall include a framework for identification of external and internal risks specifically faced by the listed entity, in particular, including the financial, operational, social, sectoral sustainability, information, cyber security risk, or any other risk as to be determined by the committee. It also measures for the risk. It also says measures for risk mitigation, including systems and processes for internal controls of identified risk. Business continuity plan. Second point would be to ensure the appropriate methodology, process, and systems are in place to monitor and evaluate the risk of the business of the company. I have to check whether there is appropriate methods to mitigate the risk or monitor the risk. The monitor and oversee the implementation of risk management policy, including evaluating the adequacy of the risk management system. To periodically review, it's whether only design and implementation is enough. No, I have to review and recheck, right? So periodically review the risk management policy at least once in 2 years. Again, could be an MCQ. At least once in 2 years. At least once in 2 years, including by considering the changing industry dynamics and evolving complexity. To keep the board of directors informed about the nature and content of discussions, recommendations, and actions to be taken. To appoint the appointment, removal, and remuneration of chief risk officer. Chief Risk Officer shall be subject to the review by the Risk Management Committee. The Risk Management Committee shall coordinate activities with other committee in instances where there is an overlap with activities of such committees as per the framework laid down by the Board of Directors. Generally, it is about formulation of policy, then ensuring proper methodology is being implemented, and then to monitor, then to periodically review at least once in 2 years, and then to keep the directors informed about the content of discussions, and then to have control over the appointment, removal, in terms of remuneration of the chief risk officer, if any being appointed for the risk management committee, and also to coordinate with other committees if there is an overlap in the activities that are to be performed. Now, amendment number 10. Information to be shareholders. Okay, there are some good things that have been changed here. The listed entity shall send the annual report in the following manner to shareholders: soft copies of the full annual report to those shareholders who have registered their email address either with the listed entity or with the depository. Hard copy of the statement contains silent features of all the document and subscribed to section 136 to those shareholders who have not so registered. Who have registered email address, then send them soft copies, go green. Okay, and if they have not registered, then send a hard copy containing the silent features. Only if they request for full annual report, then only send the full copy of the annual reports. Okay, then the listed entity shall send an annual report referred to in sub-regulation 1 to holders of securities not less than 21 days before the annual general meeting. The cut-off date would be 21 days before the annual general meeting. 21 days before the annual general meeting. In case of appointment of a new director or a reappointment of a director, the shareholders must be provided with the information. I'm going to appoint or reappoint a director, then I have to give the information about the brief resume of the director, nature of expertise, and then disclosure of relationship between the directors, and name of listed entities in which the person also holds the directorship and the membership of the committees of the board, along with the listed entities from which the person has resigned in the past 3 years. Then, shareholding of a non-executive directors in the listed entity, including shareholding as a beneficial owner. In case of independent director, the skills, capabilities required. This was already determined, right? That I have to mention it. What are the skills and capabilities and experience? I have to mention it here. Okay, this is only about for appointment and reappointment. I have to mention all these areas. Then, the auditor should ascertain from the communications and whether, in the case of appointment of a new director or a reappointment of director, shareholders have been provided with the information. And the auditor's work is again increased now. He has to check whether all the information has been provided to the shareholders. Now, amendment number 11. Compliance report. Okay, the listed entity shall submit a quarterly compliance report on corporate governance in the format as specified by the board from time to time to recognized stock exchange. Within 21 days from the end of each quarter, 21 days from the end of each quarter, I have to submit a quarterly compliance report. Amendment 12 has been consolidation of all related party related amendments. Okay. The listed entity is also required to formulate a policy on materiality of related party transaction and on dealing with the related party. I have to state the level of materiality. This This policy should also include the clear threshold limit duly approved by the board of directors. Threshold limit should be stated. Okay. Now, further such policy will be reviewed by the board of directors at least once in every 3 years, once in every 3 years, once in every 3 years, and updated regularly. So I have to set the materiality level, I have to set the threshold limit, and also the same has to be reviewed by the board of directors at least once in every 3 years. A related party transaction shall be considered material if the transaction to be entered into individually or taken together with the previous transaction during the financial year, only during the particular financial year, exceed rupees 1,000 crore rupees or 10% of the annual consolidated turnover of the listed entity. 10% of the annual consolidated turnover, whichever is lower, 1,000 crore rupees or 10% of annual turnover, whichever is lower. So this is the materiality level which is stated as per the provisions. Okay. Now, related party transaction subsequent material modification shall require prior approval of the independent directors, prior approval of the independent directors who are there in the audit committee. Then audit committee may grant omnibus approval for the related party and to buy the listed entity subject to certain condition. The listed entity shall submit to the stock exchange disclosure of related party transaction in the format as specified from the board, by the board, and publish the same on its website. There is a publishing requirement provided that a high value debt listed entity shall submit the disclosure along with its standalone financial results of the for the half year. High value, you have to specify for high value debt listed entity. It is specified to disclose it along with standalone financial statement half yearly. Okay, then provided further that listed entity shall make such disclosure every 6 months within 15 days. Every 6 months within 15 days from the date of publication. See, I have to disclose it within 15 days for every 6 months. Okay, if it is for June, then I have to submit within July 15th. Okay, for example, provided further the listed entity makes such a disclosure every 6 months on the date of publication of its annual consolidated financial results with effect from 1st April 2023. So from now on, it has to do it. As per Schedule 5 annual report, the annual report shall contain the following additional disclosure. In the annual report, the following additional disclosure are to be there. Okay, so now this will form part of other information covered in standards on auditing, right? So he has to go over the same, or it has to go over the same. Okay, just relate like this. Okay, the listed entity which has listed its non-convertible security shall make disclosures in compliance with the accounting standard on related party disclosure. Disclosure requirement will be like this: disclosure of amount at the year end and the maximum amount of loans, investments, or advances outstanding during the year. Holding company loans. Then loans, the nature of loans to associates, first subsidiaries, then associates, and then firms or companies in which directors are interested. Then same disclosure for subsidiaries also. Okay, for parent, associates, and other director related companies. Then holding company, investments by the loanee in the shares of the parent company and subsidiary. So wait. Investments by the loanee in the shares of the parent company and subsidiary company when the company has made a loan or advance the nature of loan. See, what I have done is I have given a loan as I being ABC Limited, I have given a loan to some director or some any of these parties. Okay, they have again invested in the shares of the parent or there is holding company or subsidiary company. That amount has to be disclosed specifically. Okay, understood? So this could be a twisted area within the question. For the purpose of above disclosure, director's interest shall have the same meaning. Okay. Disclosure of transactions of the listed entity with any person or entity belonging to the promoter or promoter group which holds 10% or more of the shareholding in the listed entity in the format prescribed in the 11th accounting standards for annual results. Above disclosure shall not be applicable for whom listed banks shall not be applicable for listed banks. Now, so with this we have completed till 2 chapters. Let's move on. It's quite big task to record in single one go. Okay. Yeah. So let's finish this one first. Okay. Then we'll move on to NBFC, then professional ethics. Okay. So what is there in chapter number 16? Nothing except one thing. Okay. What is that? Everywhere where there was audit or auditor was mentioned, now it has to be read as accountant or accounting. Earlier it was forensic audit, now it is forensic accounting. Earlier it was forensic auditor, now it is forensic accountant. Simple, right? But it's a change. Okay. Now, but now if you go and write as forensic auditor, they will reduce marks. They have given explicitly, right? So you have to follow this one. So be careful. Okay, don't write as usual. Okay, now let's move on with chapter number 11, audit of NBFC related amendments. Yes, yes or yes? Yes, good. Pursuant to the announcement of scale-based regulation, pursuant to the announcement of scale-based regulation, a revised regulatory framework for NBFC on 22nd October 2021 to be effective from 1st October 2022, RBI has revised the different facets of existing NBFC classification and regulation like capital requirements, governance standard, prudential regulations, etc., based on 4 layers that are defined based on size, activity, and perceived riskiness. See, now that I'm going to have only 4 different layers, like they have revised the peer review applicability. Now, NBFC classification is also being revised into 4 different layers. What are the 4 different layers? Let's read it. First one is base layer. First one is base layer. Second one is middle, upper, top. So simple, right? Base, middle, upper, top. Usual words which we usually hear. But there are some definitions for it. Okay. There could be a single theory question which says, please write a short note on base layer. You have to write it. You cannot write anything on your own. For that, you have to know that there is a NBFC classification which has been revised, which has been now there are only 4 layers, one of which is base layer that you have to write. Okay, that there are 4 layers of NBFC. Okay, jokes apart, let's continue. The top layer is ideally expected to be empty and will be filled by RBI based on required need. The details of NBFC populating the various layers is mentioned below. Base layer. The base layer shall comprise of the non-deposit taking NBFC. Non-deposit taking NBFC, which means they don't take deposits below the asset size of 1000 crore. Below the asset size of 1000 crore. Please, like you memorize the peer review applicability, please to memorize NBFC applicability also, because there is high possibility to get MCQs on it, because everything is numbers here. Okay, numbers are somewhere the categories. Okay, NBFC are taking the following activities: peer-to-peer lending, account aggregator, non-operator financial holding company, NBFC not availing public funds and not having any customer interface. Not having any customer interface. So base layer, let's repeat. The base layer shall comprise of non-deposit taking NBFC below the asset size of rupees 1000 crore and NBFC undertaking the following activities: NBFC peer-to-peer lending platform, NBFC account aggregator, and non-operator financial holding company, and NBFC not availing public funds and not having any customer interface. Now let's move on. The middle layer. The middle layer shall consist of all deposit taking NBFC. All deposit taking NBFC, irrespective of the asset side. Irrespective of the asset side. Non-deposit NBFC with asset size of 1000 crore and above. 1000 crore and above. Till 1000 crore, it was base layer. 1000 crore and above asset size would be middle layer. NBFC undertaking the following activities: standalone primary dealers, dealers, infrastructure debt fund, non-banking financial companies, core investment company, housing finance company, infrastructure finance company. All deposit taking company will be here. So all deposit taking NBFCs, irrespective of the asset size. Non-deposit taking NBFC with asset size of rupees 1000 crore and above, and NBFC undertaking the following activities: standalone primary dealers, infrastructure debt fund, non-banking financial companies, core investment company, housing finance companies, and infrastructure finance companies. So now what will be covered in upper layer? The upper layer should comprise of those NBFCs which are specifically identified by RBI as warranting enhanced regulatory requirement. Those warrant enhanced regulatory requirement based on set of parameters and scoring methodology as provided in the appendix to circular. The top 10 eligible NBFCs in terms of asset size shall always reside in upper layer irrespective of other factors. The top 10 NBFC will be there in upper layer. Top 10 NBFC will be there in upper layer. Okay, so quite simple, right? You have to RBI has to specifically state that those warrant enhanced regulatory requirement. I will mention those names. Those will be forming part of upper layer. Otherwise, top 10 NBFC, eligible NBFC will always form part of upper layer irrespective of any other factor. Now, top layer, generally it will be empty. Okay, generally it will be empty. So you can get a question: top layer, what are the categories? You will say it will be empty. It will generally be empty. This layer can get populated if the reserve bank is of the opinion that substantial increase in the potential systematic risk from the specified NBFC in the upper layer. See, here I have identified some parties, right, who warrants enhanced regulatory requirement. Those again is committing some mistakes with me and making me into trouble. Okay, then the RBI will push them to top layer. Such NBFC shall move to the top layer from the upper layer. So from here, if they are posing me significant systematic risk, then that will be moved on or pushed to the top layer. Categorization of NBFC carrying out specific activity as per the regulatory structure and is scale based as well as activity based regulation. The following prescription shall apply in respect of the NBFC. See here, peer-to-peer lending, account aggregator, and non-operative financial holding company. An NBFC without public funds and customer interface will always remain an base layer. Simple, right? Then NBFC deposit taking, core investment company, infrastructure finance company, and what other one was HFC? Housing finance company, right? Good. Housing finance company will be included in the middle layer and an upper layer and not in base layer as the case may be. And SPD and IDF NBFC will always remain in middle layer. The remaining NBFC which are investment credit company, microfinance institution and mortgage guarantees company, NBFC factors, those could lie in any layer depending upon the requirement. Okay, then government owned NBFC shall be placed in the base layer or middle layer as the case may be. They will not placed in upper layer until further notice. These two could be an MCQ because rest all is very fine, very clear, right? You will already get to know it by definition. Only if you read this paragraph, you will know these 2 points. So this could be an MCQ. All reference to non-deposit taking company shall mean base layer, and deposit taking and non-deposit systematically important shall mean middle layer or upper layer as the case may be. So with this we have completed almost all chapters. Only then peer professional ethics is still pending. Okay, peer review was already completed in separate video. Please do watch it. Okay, if you have not watched it. Now there are some points which has been divided into 4 categories. 4 amendments are there. So let's try to complete in 10 more minutes. Okay, let's start. Amendment number 1. There were certain provisions which were deferred till 30th September 2022 and now it is made applicable from 1st October 2022. Okay, till 30th September it was deferred. Okay, there were some provisions, okay, which were there earlier, but it was deferred. Now the existing provisions has been modified with amendments, okay, and made applicable from 1st October 2022. Clear? There were some provisions, okay, which was deferred but till 30th September 2022, and then they made some amendments and they have made it applicable from 1st October 2022. Okay, what the ICAI our institute has done is they have given the existing provision for our understanding purpose and they have given the revised provision. So we'll focus only on the revised provision because that was what will be asked in the exams. Okay, let's start it. The differentiated disclosure requirements is for fees relative size. Okay, fees relative size generated from a single audit client and its related party represent a large population of the total fees of that firm. The dependence on the client and the concern about losing the client creates a self-interest or intimidation threat. That's why they have been making disclosure requirement. Now, this is based on differentiated disclosure requirement. For non-public interest entity, disclosure is required where for 2 consecutive years, the annual professional fees from the audit client represent more than 40% of the fees of the firm. If it represents more than 40% of the fees of the firm from a single client or a related party for 2 consecutive years, then the disclosure has to be made. For public interest entity, disclosure is required where for 2 consecutive years, the gross and professional fees from an audit client represent more than 20% of the total fees of the firm. For non-public interest, it is 40%, and for public interest, it is 20%. Who are those public interest entities? Listed entity identified as public interest, and then banks and insurance company. Then exemption from the applicability of the provision where total fees received from the firm does not exceed 20 lakh rupees. I don't want to disclose when if the total fees does not exceed rupees 20 lakh. Okay, then exemption from the applicability of the provision in the case of an audit of a government company, public undertakings, nationalized bank, public financial institution or where the appointments of the auditors are made by the government or the regulators. Okay, then who have to disclose? I have to disclose to the institute. I have to disclose it to the institute. Okay, then this was now repealed. Okay, pre-issuance review or post-issuance review. This is now repealed. This is with respect to fees of the client. Let's repeat it once again quickly. Okay. For non-public interest entity, I have to disclose where for 2 consecutive years the gross annual professional fees from the audit client exceeds 40% of the total fees, and if it's for a public interest entity, if exceeds 20% or more of the total fees of the firm. Who are the public interest entity? Listed entity deemed to be a public interest by any regulation or legislation, banks and insurance company, and then exemption from applicability of the above provision by total fees does not exceed rupees 20 lakh. And who are all exempt from the applicability? Government companies, public undertaking, nationalized bank, public financial institution, or where the appointment of the auditors made by the government or the regulators. And now it has been disclosed to the institute, and the pre-issuance review or post-issuance review is now repealed. Now, tax services to the audit clients. In case of an assistance in the resolution of tax disputes, the term court is explained as under. For the purpose of subsection, court does not include a tribunal. What does this mean? Why is there a specific provision like this? No, it is like generally for our audit clients, if there is any tax dispute, they ask us to go and appear before the income tax authority. Okay, that is again an area for chartered accountants. Okay, now that assistance in resolution of tax dispute would make us to show present ourselves before the income tax authorities or the courts. Okay, here the term court would not include a tribunal. It's an amendment here. Now, responding to non-compliance with laws and regulation, there is no clause applicable to professional accountants in service, applicable to senior professional accountants in service being an employee of listed entity. Senior professional accountant in service being an employee of listed entity. Okay, here senior professional accountants in service are directors, officers, or senior employees able to exert significant influence over and make decisions regarding the acquisition, deployment, and control of the employing organization's human, financial, technological, physical, and intangible resources. It is further explained that the senior professional accountant referred to the KMP. Okay, KMP will be known as senior professional accountants. Now, what is the amendment number 4? It is responding to no clause applicable to professional accountants in public practice. Applicable to audit engagements of the entities, the shares of which are listed in recognized stock exchanges in India and have a net worth of 250 crores or more, and is being listed, then only this no clause will be applicable. The applicability of this section 360 will subsequently be extended to all listed entities at the date notified later. For now, it is applicable to those listed entities having a net worth of 250 crores or more. Okay, and for rest listed entity, it will be notified later. Then, the term audit engagement defined in glossary applicable to the entire code, a reasonable assurance engagement in which the professional accountant in public practice expresses an opinion on the financial statements, whether the financial statement and all material aspects prepared in accordance with the applicable financial reporting framework. This engagement conducted in accordance with standards on auditing. This includes statutory audit, which is an audit required by the legislation or other regulation. No change. But for the purpose of section 360, audit or audit engagement shall mean reasonable assurance engagement in which a professional accountant public practice expresses an opinion whether the financial statement give a true and fair view in accordance with the applicable financial reporting framework. This is what definition we have already learned, that has been newly included. Okay, so imminent breach, this measure has now been repealed. Okay, so with this we covered all the amendments in the CA Final Audit. Okay, which is applicable to May 2023 examination. If you are watching this video and visiting our channel for the first time, please do subscribe, hit the like button, and if you find this video useful, please do share with your friends. Stay tuned for more videos, and tada bye bye, take care.